Welcome to Index Orbit. Today, we are performing a deep dive into the Nifty 50 live option chain and smart money concept report. We will analyze the market sentiment for the upcoming sessions using data from July 15th, 2026. Our learning objectives are: first, understand Nifty 50 key metrics like PCR and max pain. Second, identify support and resistance using open interest walls. And third, analyze SMC levels on the chart. Before we begin, for the best trading experience and live option analysis, I highly recommend using the Dhan trading platform. You can join using the referral code EJZZI96380 to get started. Don't forget to like this video and subscribe to Index Orbit for daily updates. In this lesson, we will cover the data snapshot, the open interest wall map, today's changes in open interest, and finally, how to overlay smart money concepts on your daily candlestick chart. Let's start by looking at the high-level data snapshot to gauge the overall market sentiment. We see a total put open interest of 6.9 crore and a call open interest of 8.01 crore. This gives us a put-call ratio, or PCR, of 0.86. Typically, a PCR below 1 suggests that there is more call writing than put writing, indicating a mild bearish tilt among sellers. Additionally, the max pain level is sitting at 24,100. Max pain is the strike price where the most option contracts would expire worthless, often acting like a magnet for the price as we approach expiry. Since the current spot price is 24,052, it is sitting just below this 24,100 magnet. The at-the-money implied volatility is 13.02, which is relatively stable for this price action. To truly understand where the market might struggle or find support, we need to look at the OI wall map. This acts as a map of support and resistance based on where big players have written their contracts. Look at the strike price of 24,000. Notice the tall purple bar. There are 53.23 lakh put contracts here, making it our strongest support, or the floor. Now, look at 24,100. The orange bar is massive, with 63.64 lakh call contracts. This is our strongest resistance, and it coincides exactly with the max pain level. In plain terms, our spot price of 24,052 is trapped in a very tight 100-point box between 24,000 and 24,100. Outside of this box, we have a secondary support shelf at 23,800 and a secondary resistance at 24,200. This tight compression suggests a significant move is brewing once one of these walls breaks. It is not just about the total walls. We must look at what happened today to see where the fresh money is going. Today's session was intense. We saw fresh put writing surge at 24,000, adding 25.73 lakh contracts, and at 24,100, adding 22.63 lakhs. This shows that bulls were actively trying to defend these levels. However, the bears were even more aggressive. Fresh call writing surged at 24,000, adding 33.72 lakes, and a staggering 53.49 lakes were added at 24,100. Notice the negative bars at 24,150 and 24,200. This is call unwinding. Sellers pulled back from these higher strikes, which effectively tightens the ceiling closer to the current spot price. When both bulls and bears pile into the exact same zone, the market compresses into a coil. A breakout from this tight band is likely to be much sharper than usual. Use the Dhan trading platform for the best trading experience and live option analysis. Use referral code EJZZI96380. Like and subscribe to Index Orbit. Now, let's transition from the option chain data to the price action. We use smart money concepts, or SMC, to visualize these levels on a daily candlestick chart. Looking at the daily candles, we see a sharp decline in mid-June that tapped into a major liquidity pool between 23,000 and 23,200. Following that, we had a strong rally, a break of structure, taking us to a swing high near 24,600. Since that high, we've seen a pullback. Currently, the price is consolidating right at the 24,000 to 24,200 zone. Notice how this technical consolidation aligns perfectly with the OI walls we just analyzed. Tomorrow, there are a few things you should watch for. First, if the price wicks below 24,000 and then closes back above it, that is a classic liquidity grab of the put wall. If you see this, look for a change of character or CHoCH on a smaller 15-minute time frame before considering a long position. Second, if the price grinds above 24,100 and holds, and we see call unwinding continue on the Dhan platform's live analysis, it means the ceiling is being vacated. This could lead to a swift move toward 24,200 or 24,300. Remember, a clean break of the whole range with OI confirmation is much more reliable than price action alone. For the best trading experience and live option analysis, use the Dhan platform. Like and subscribe to Index Orbit. Based on the data and the chart structure, we can map out two primary scenarios for the next trading session. Scenario A assumes the range holds. This has a higher probability right now because Max Payne is pinning the price near the expiry week. In this case, traders often fade the extremes. This means you look to sell near 24,100 on the way up and buy near 24,000 on the way down using very tight stop losses just beyond each wall. You'll want to exit these trades before the heavy volatility of Thursday's expiry sets in. Scenario B is the breakout scenario. For a bullish break, we need a daily close above the 24,100 to 24,150 zone, accompanied by continued call unwinding at those higher strikes. This would target 24,300 and then 24,500. On the flip side, a bearish break requires a close below 24,000. We would look for put unwinding at 24,000 minus 50 as confirmation that the floor is giving way, targeting 23,900, 23,800. A crucial tip for beginners: don't enter on the very first touch of these levels. Wait for a sweep and a reversal confirmation candle, or a clean close-through for the breakout case, before you commit your capital. Use the Dhan trading platform for best trading experience and live option analysis. Use referral code EJZZI96380. Like and subscribe to Index Orbit. To wrap up today's analysis, we must consider a few important caveats regarding this data to ensure you are trading with the right perspective. First, remember that this is an end-of-day snapshot. The market was closed when this data was compiled. Live open interest can shift materially during the first 15 to 30 minutes of the market opening tomorrow. Always verify the live levels on your Dhan dashboard before making a move. Second, while Max Payne is currently at 24,100, its magnetic pull typically exerts more influence as the expiry date of July 21st approaches. Since we are still a week out, don't overweight this single metric just yet. Give the price room to breathe. Finally, always remember that options trading carries high risk, and it is possible to lose your full premium. This report is for educational purposes and is not personalized financial advice. Please consult a SEBI-registered advisor for guidance specific to your situation. We have successfully covered the Nifty 50 metrics, identified the key OI walls at 24,000, 24,100, and mapped out how to trade these levels using smart money concepts. If you found this breakdown helpful, please like the video and subscribe to Index Orbit for more daily reports. For the best experience, use the referral code EJZZI96380 to join the Dhan platform and start analyzing live data like a pro. Happy trading!